Assalamu alaikum, everyone. The topic I'm going to cover today is operating leverage and business risk. This is question 18A from chapter 9 of the 10th edition of Principles of Corporate Finance. So the question we have is, there's an investor who runs a perpetual incubator machine which generates revenue averaging 20 million. Raw material costs are 50% of revenues. These costs are variable, that they're always proportional to revenue. Thus, whatever the revenue, the raw material cost will always be 50. So if revenue is 20 million, the raw material cost will be 50% of 20 is 10 million. But if the raw material is 22 million, the revenue is 22 million, then the raw material cost will be 11 million. So we have this variable relationship over here. There are no other operating costs. The cost of capital is 9%. The firm's long-term borrowing rate is 6%. Between the cost of capital and the long-term borrowing rate, the discount rate to be used is the cost of capital. It incorporates the borrowing rate as well as the equity rate. Now you're approached by a company and they want to propose a fixed price contract. So your variable rate of 50% moves to a constant rate of 10 million per year for 10 years. What happens to the operating leverage and business risk of the incubator machine if you agree with this fixed price contract? Now, the first thing you need to know is, what is operating leverage? So operating leverage refers to the extent to which a company's operating costs are fixed versus variable. A company with high fixed costs and low variable costs has high operating leverage, because there's high fixed costs, you must cover that cost. On the other hand, a company with low fixed costs but high variable costs has low operating leverage. So when this person comes in and says, I'm going to give you raw material at 10 million flat constant rate, what is the impact on the variable costs? The original 50% of variable costs have now switched and become fixed costs. So what's the impact on the fixed costs? Did they increase or decrease? Since we know there were no other operating costs, this 50% variable cost was the only cost. Now, after signing this 10 million fixed cost deal, your fixed costs have increased. So if your fixed cost increases, your variable cost decreases, then your operating leverage has become higher. Thus, your operating leverage increases. The second part of the question asks for the business risk of the incubator machine. So let's start with the definition. Business risk refers to the risk that the company will not be able to generate sufficient revenues to cover for the operating costs and other expenses, resulting in financial losses. Now, if a company is doing well and it's generating enough revenues to cover all the costs, then the business risk is low. So in this scenario, we have, what happens if the sales dropped? If the sales drop drastically, in the variable cost scenario, what would have happened would that the cost would have decreased. On the other hand, now, if the revenues decrease significantly, the fixed cost of raw material supply will remain 10 million. It will not change. So now you have a chance that if your revenues decrease, you might not be able to cover this fixed costs. So the change in costs, it's the same. We are switching from a variable to fixed cost. There's no impact on revenue of the company. The resulting would be that the business risk decreases as you reduce the risk of fluctuation of the variable costs, but there is the reverse side. It could increase. It could increase If the revenue drops drastically, in which case the variable structure was better. So depending on the type of company, if the revenue stream is relatively constant, as I say, it's an average about 20 million, then the business will definitely reduce, because now your fixed costs, your operating cost is just fixed. It will not change with your revenue, and you'll be able to cover it. On the other hand, if there's a high variability in revenues, then it is better to stick with the variable structure and not go into the fixed structure. Thank you for watching. Please like and subscribe.